Welcome back to Imperial Wealth's Crypto Chronicle podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week. Mitchell, how are we?
William, I'm very good. How are you?
I'm very well. Back for another update for our loyal fans.
Yes. It's been a slow but steady week, but I think today is finally where the action is heating up, and maybe most of the cryptocurrency enthusiasts will be scourging back to the charts to see what's occurring.
Us indeed. Just before the podcast, we almost weren't going to get this one out today. We'll just glued to the screens watching what's going on. But had a couple of buys on the Trading Academy this morning, and looks like you got the bottom there.
Yeah. Well, so far we don't want to speak too early, but bottom. It was similar to kind of. It's hard making these calls because we did the same on the last thing, and the actual project that we bought this morning was lower than the last time. We're at 24K when we bought. But yeah, it's an interesting dynamic. Obviously, the last few weeks, and I think since the inaugural podcast, that BTC is pretty much traded at the exact same spot. So the way I see it is, although price did dip in Bitcoin and alts this morning, at least we're finally seeing some action. And because I think the consolidation and the trading sideways is what turns people more crazy than anything.
100%. I mean, I talked about it in the previous episode that at the boxing gym, a couple of guys are leaning on me for a bit of advice of how to get into the market. And I had the same conversation with one of the guys there last night, just, be patient between on the halving next year. All we can really do is kind of just get our entries in. If it goes down more, then you're going to get a lower average price. And this all really means nothing when things really start to escalate. So that's good. Very good. So we'll jump into the fundamental news that's happened. The spotlight tends to be on regulation at the moment. Yeah,
so I think just even we briefly mentioned last week the Australian Senate Committee's rejection of that pivotal crypto legislation done by Senator Andrew Bragg. And really the theme of the last 7 days or so has not only just been in Australia with that bill being rejected and the comments around that, but we've seen the CFTC in, America propose a trial program for regulating cryptocurrencies. We've seen, G20 nations advance forwards towards.
Corrected me that it's G21 now with the African Union jumping in.
There we go. So maybe I need to change the title of that. That article. But yeah, so really that's the flavour of the week. We've seen Grayscale request further meetings with the SEC to discuss the way forward. Seen, Cathie Wood, the great investor in ARK Invest and 21 Shares, try to get the inaugural Ethereum ETF over the line, and seen a bunch of institutions actually get involved in blockchain. So yeah, I thought we'd start firstly just with Australia for our Australian listeners mostly. I'm not sure if we've got any international fans yet, but if you are international, welcome. But yeah, so essentially what's happened since then, just to remind those people, is that the Senate Committee on Economic Legislation has recommended against passing Senator Andrew Bragg's digital assets market regulation bill for 2023, just advising that further research is needed, amongst other things. And I think you had a good example of, why this is kind of a bad thing.
Yeah, I mean, like in the articles that we read, it often says, this is going to fall on consumers. It's not going to be good for consumers, but what does that actually mean? And I think the best way that you and I could put it together was it's a FTX disaster waiting to happen again. Some nefarious exchange launches, whether intentional or not, they don't operate in the correct manner. They get themselves in trouble, and all of a sudden, thousands, millions of customers' funds are, at risk. And what's the recourse going to be for something like that? Unfortunately, we often see the regulators step in after the fact with these types of problems. When FTX went down, all eyes are on to help out now, but it's too late. Yeah, hopefully we don't see that. It looks like mostly, I mean, here you've got it in the notes that they want to exclude NFTs from the bill, and they also just want to take a bit more time. So it's not like a full, we're not going to do anything.
No, not at all. I think, with their token mapping and the number of things they're doing, they look like they're going in the right direction. I think just the comments over the last few weeks around this, and as other people in the industry have said, is that we're just lagging a bit too much behind. And obviously, I think we discussed it on the last podcast. We've said it a few times over the last few weeks. We're ranked 63rd out of 64 developed nations for tech innovation. So, I think given this is probably one of, if not one of the biggest tech innovations of the 21st century, it's something we don't want to fall behind and have, business going elsewhere like we're kind of been seeing with the US and how it's hurting them. And I guess the main thing there is, like you said, you don't want to see an FTX situation happen down under where, hundreds of thousands of people lose funds to a bad actor, and then, the ACCC decide now's the time to get regulation in place when it should have been there beforehand. Because I think, as we talked about the stats, 27% of Australians or hold cryptocurrency or have, so, that's a large chunk that you want to protect.
100%. Yeah, we don't want people getting caught out. Puts bad blood in the industry, and we want to see things progress and move forward. So, what else have we got here? So,
just given that, there is a lot going on in Australia, and despite this, we're still seeing some great steps taken internationally in the regulatory environment. Obviously, the US hasn't been the greatest, and most people probably think they're very hawkish when it first springs to mind about the way they regulate things, because they just think of Gary and the SEC, obviously. But there was a huge thing that occurred in the States this week with the approval of the long-awaited alteration in cryptocurrency accounting standards by the standards boards. Now, this probably won't relate too much to retail traders or retail investors, but essentially these new regulations, effective from 2025, aim to enhance transparency for investors and financial statement users in light of crypto's volatility. So it essentially means under current rules that cryptocurrencies could only be marked down as an impairment charge if their value dropped below the original cost. But this allows companies like Coinbase, MicroStrategy, Tesla, these huge companies, to immediately adopt fair value accounting for their cryptocurrencies holdings to allow them to reflect gains along with losses. I think this is a massive thing. I think I'd heard even Michael Saylor, along the way across the last few years say, once we have this accounting standard in place that allows big companies like us to record at fair value rather than impairment losses, a lot more companies would begin to adopt.
Yeah, 100%.
Even crypto, just based off those standards. So that's good. And then additionally to that, we saw a commissioner at the CFTC propose a trial program for regulating cryptocurrencies in the United States. So Caroline Pham, a CFTC member, has proposed the creation of a limited pilot program for cryptocurrency regulation in the States. Once again, just another step forward to trying to regulate, what is a highly volatile industry, as we all know. And, her doing this allows, the pressure on the states to get something in place in order for FTX 2.0 to not occur.
Exactly. I mean, it looks like, exactly. This is what we want, right? We don't want them just sitting on the sidelines waiting for problems to happen. We want them taking action and getting things moving. It was looking really dire at the start of this year with all the stuff Gary Gensler was up to. The Ripple case is probably one of the first victories that we had come forward. A little bit more definition about what securities are. Like seeing these types of accounting things come forward now as well. It's really painting the path for what we need. Going forward into the exciting bull market, fingers crossed, next year.
Yeah, for sure. So just before we move on, probably the last regulatory thing that we want to mention is obviously the G20 or G21 nations advance forward towards establishing that global crypto framework. So I think there was a large meeting recently held by all the leaders, and they're really just pushing for the swift implementation of a cross-border crypto framework. So this is essentially just aiming to commence, international information sharing by 2027. Obviously, these things take time.
Clearly. But 2027, I thought you were about to say at least 25.
Yeah. But the framework will impact numerous countries, including major economies like the United States, China, European Union. And essentially it proposes automatic annual information exchange between nations, encompassing transactions on unregulated crypto platforms. And also, recommendations for stablecoin regulation have also been endorsed. And obviously stablecoins will be the hot topic of international regulation, I guess, due to CBDCs, CDB, I don't know, one or the other.
Central banking coins, whatever we're going to call them.
Digital currency. But so essentially that's a big thing as well. So really the result of this increased regulatory scrutiny, as we've said, is it's actually going to allow us to eventually see greater adoption, and particularly adoption via strong institutions. So as we touched on earlier, could pave the way for an easier ETF approval if these things are given the green light, and companies do have a great understanding of what they can and can't do and how they record things and what's allowed and what's not, and also obviously paints the picture a lot clearer for the SEC and CFTC as well. So obviously the first big thing to come out of kind of last week was Grayscale winning that case against the SEC, and now they've actually requested a meeting to discuss the way forward from them converting their trust into an ETF, which is just awesome movements in that thing. Hopefully they do get to meet together.
There's been big institutions getting into the stablecoin space lately. I mean, we've had PayPal.
Yeah, PayPal.
We had not long ago Shopify adopting Solana Pay.
Yeah.
And then we didn't get to touch on it on last week's podcast, but it did happen last week. Visa have recently adopted also Solana Pay. Which is awesome. It's interesting though that it hasn't really affected Solana's price. Classic bear market things.
Yeah, we were just discussing that before, and I said it to someone else who asked me. I think on the day Solana would have popped about 4%, and we were talking about how in a bull market when everyone's got the spare capital and everything's raging and the slightest of good news does some special things, and we were saying how to probably pop Solana by 30 to 40% once you hear Visa's collaborating completely with them to integrate their own USDC payments, which is pretty crazy when you think about it. So yeah, essentially what's happened there is they've expanded its stablecoin settlement capacity to include the USDC tokens on the Solana blockchain. And like you said, this follows their integration with Shopify. So that's two huge institutions that are partnering with Solana and putting their faith in them. And obviously what this does is it aims to expedite cross-border settlements, reduce fees, obviously facilitate seamless fund transfers, amongst a whole bunch of other stuff. So it's really awesome to see projects like Solana who have copped the heat throughout the bear market to still have faith in them by these large institutions.
Exactly right. No, it's really, really good. It's exactly what we want to see happening. And yeah, obviously when we come into that bull market, we'll see the true fruits of it.
Yeah.
Is that pretty much a good rundown on what's going on the fundamentals and the news side this week? Or we also had Metamask. I think that's pretty cool too. Getting the fiat on ramps.
Yeah, so I don't think it's too efficient right now. I've seen a lot of people complain about it, but I think that'll improve as time goes on. But obviously Metamask as a retailer or as an introductory thing to kind of cryptocurrency, you'll use it probably in your first few hours in crypto, or you'll probably be recommended to use a wallet pretty similar. But I think it's good that they've introduced a functionality enabling the conversion of crypto to fiat. I think it's only on ETH right now. You can do ETH to USDT and that type of stuff. But obviously as time goes on and they expand and the market expands, they'll obviously introduce more conversions and make it a bit cheaper. But just that's really good to see. I think the only thing worth touching on the fundamental side is probably just talking about how another big firm, JP Morgan, explored blockchain-powered deposit tokens. So obviously we know JP Morgan is I think it is the biggest American bank, or it's got to be one
it's
of.
definitely up there. Wells Fargo, JP Morgan, all
So they're like the other big institutions exploring blockchain technology and how they can integrate into their systems to make things more efficient and cheaper. And then I think probably the most important one that we briefly touched on was Cathie Wood and co going for the inaugural Ethereum ETF. So, all the talk's been about Bitcoin ETFs, but we're seeing them come through for Ethereum too. So if you're an Ethereum fan out there, one of those people that think Ethereum's got the shot to flip Bitcoin one day, and the great flippening, I think they call it.
Yeah, the flippening.
Maybe this is your key to it, getting an ETF there and getting all the institutions to eat it up. So I think that'll finish us for majority of the fundamental news this week. Hasn't been too much, nothing too impacting the market. Obviously we have federal interest rates next week, which will probably be the big story on the data coming out for that, and then the decision, because that'll probably paint a picture for majority of the markets for the rest of the year, particularly the language that Jebediah Powell uses, but we can speak about that next week when it's about to arrive. So just before we get into talking about a fair bit of mining, I want to quickly touch on some technical analysis. So as we mentioned, the market was stable coining for the best of a couple of weeks there, particularly when we rebought out the podcast. But overnight, whilst us Australians were asleep, BTC dipped around 24,900 on main spot exchanges. So this actually almost hit our high low and our June low of 24,750. But obviously, as a result of not reaching that, the bullish market structure that I've been talking about and showing in the Chronicle across the last few weeks still, in fact, stays intact, which is good to see. Because I'm sure a few people might have got bearish if we kind of invalidated that bullish market structure, and then you could, make the argument that we're back fully 100% in the bear market and going to start putting in some lower highs and some lower lows. But, as a result, Bitcoin dominance has kicked up a bit from this recent dump, which wasn't good for alts. We saw a lot of different alts put in new cycle lows, like pretty much the lowest they've been since, 2020 from the COVID crash. So one of those is DOT that I noticed. I think that was in the 3s. I'm sure it's probably up in the 4s now that we've pumped a little bit. But that was
on that quickly. There was one thing that came through. And I haven't verified it yet, so correct me if I'm wrong, but FTX got approved to sell off.
Yeah, so I think they want to liquidate a lot of their holdings. Now, there's a lot of what I like to call fake FUD around this, and I was explaining to a client earlier that was saying, are all the alts being sold off because FTX holds all these? Well, you had to take a closer look at what the contract said and what... So essentially... FTX was a VC in Sol, so I'll talk about Sol first. But like all pre-sales of tokens and ICOs, they vest over a certain period of time. So yes, FTX holds X amount, but they vest over the next 8 years. Right. So let's just say 10% of those holdings are unlocked this year for them to sell. And then next year it's 10%. And the year after that it's 10, and so on and so forth. So I think Sol's okay. One of the bad ones was FTT, which I don't think anyone cares about if that goes to zero, if it's sold and gone to zero. If you look at their BTC and ETH holdings, they're substantial holdings, but in terms of daily volume on BTC and ETH, I don't think that'll impact price too much.
Right.
There were a few others that off the top of my head I can't remember. I think the only bad one that I saw looking into it, I was like, this is kind of a bit bad, was Aptos, which was obviously a very new project from the end of last year that's built on Solana, on the Solana blockchain, or maybe it's its own blockchain. I'm pretty sure. I can't remember, but anyways, it was a big VC one, and I think if you hold a bit of Aptos, maybe you can begin to worry about FTX selling that off. But I think a lot of it is major FUD just built up from, you hear FTX is selling all of its coins and you think, shit, now the market's going to crash. It's not like that in reality. So I think don't be too concerned about that.
Yeah, so be aware of it, but we don't think that's the cause of the market going down. Now, it was a Twitter post I saw, so it can't be the most verified thing. I didn't look too much more into it, but it mentioned around 200 million as a cap per day that they would be selling off. And was that confirmed? Is that what will happen, or we're not sure?
I'm not 100% sure.
Okay.
But quickly, just before we go, moving on, as we kind of said in the last few podcasts, when there's a bit of fear and blood in the market, the Trading Academy like to move pretty quickly and purchase what we think is undervalued and what we think we should keep continuing to dollar cost average into, which we did on one of our main, or pretty much what I've established as our main alt buy for the next cycle and for the next bull run. Because obviously what we want here, and as we've said, is when you're dollar cost averaging, you've got this idea of when you hit these support levels is you're actually happy because you're grabbing something cheaper than what you think it should be, and you're bringing down your average buy to increase your ROI in the next incoming bull market. So and then additionally, following last week's successful navigation of the pump and dump following the grayscale news, in which our day traders were privy to pretty much perfectly longing and shorting the Pico bottom and top, end of last week we were able to nicely short BTC after it reached its minor range highs late last week and get some profit on it whilst we're at the footy. And then this morning as well, we've been able to successfully pretty much long Bitcoin and a couple of other things from its lows. So all trade setups were set in there. So, if this is something that ever interests anyone out there listening, just get in touch with myself, Will, or Taylor, and we can run you through it.
Yeah, definitely. It's been awesome. There's definitely a rising confidence in the group of traders that are following that service now, starting to post some wins, some losses, but they're definitely learning along the way. And now's the time to do that before the bull market where things get really serious. So great stuff on that side. We'll go into some mining. There's been a bit happen over the past, I suppose, week or so. We've seen the block reward go back up, which is really, really nice. It's average of 50 to 60%, which reached 0.31 PTC. So basically what that means for anyone that's listening in right now, there's two portions to mining reward. Every block, which is every 10 minutes, we get a BTC kind of bounty, which comes from the treasury. And basically, as we all know, there's only 21 million Bitcoin out there. About 19.5 million of those are in circulation right now, and the last 1.5 million get rewarded to miners every 10 minutes. So at the moment, that block reward is 6.5 Bitcoin, and as we know, that halves every 4 or so years. Now, the other part of the block reward is comes from all the transactions that are occurring within that block. And interestingly enough, miners don't usually rely on that block reward. It's usually a small amount every block. As I say, the reward from Treasury is 6.5, and then the reward from the block reward is only 0.3 or 0.5. So when you're calculating profitability, usually miners don't take it into consideration too much. But this year in May, we had ordinals launch, which are pretty much NFTs on the Bitcoin blockchain, which we probably didn't expect. And that shot up rewards to the same as what the block reward was. So rather than getting around 6.5 BTC per block, we were actually getting around 12, which is huge. You're doubling rewards as unexpectedly. So that's a bit of education, a bit of understanding around what we're referring to when we say block rewards have gone up. And it's definitely welcomed by our miners, because at the moment when BTC goes down, the daily profit that we're earning is a little bit lower. So there you go, bit of news, block rewards going up. We've also seen difficulty go down, largely due to the heat wave that's occurring in Texas right now. We've seen about 15% of all network hash rate drop off. And as I say, that's mostly because of those Texas miners having to turn their machines off, not being able to withstand the 40 to 50 degree heat over there. So that's really solid stuff. Bitcoin mining is looking good at the moment, despite BTC price down a little bit. And as we know, we don't sell our Bitcoin on the daily basis anyway. We sell it in the future. So it's more important to us the amount of Bitcoin we're getting at the moment. Machinery prices have been quite low lately. Some of our largest clients are really taking this by the horns, so to speak, and taking advantage of this opportunity, looking to scale out their operations. We've got the average terahash price at about $37, $39, which is incredibly cheap. And especially if you're interested in, sometimes it can be a little bit more nerve-wracking getting pre-orders of miners, because they can be delayed a little bit. But we've definitely got our hands on some of the S19K Pros, which absolutely probably one of the more solid miners that I would be recommending coming into the next bull market. So yeah, get in touch with Taylor. Head to our website, imperialwealth.com/crypto. Find the mining section, book in a call, have an in-depth conversation with him. Even if you're just thinking about getting into the crypto mining for the moment, you're not really 100% sure, is it profitable for you? Is it the right investment for you? You don't really need to know how it works yet. Just a 30-minute consultation with Taylor can kind of get you up to scratch on all that. And it could set you up for the long term. Major benefits of mining, obviously it's highly scalable. You can start with 1, go all the way to 1,000 if you want to. It's a passive source of income. It's forcing you into a dollar cost average strategy. So rather than just buying $10,000 worth of Bitcoin today, you'd be buying a miner which is going to mine you Bitcoin over 3-4 years, whatever it may be. There's many other benefits we could go through, compounding, etc., but go through all the details with Taylor. And the final point that I want to touch on, we've been having a little bit of fun. The boys in the office have been putting up with some Casper miners that have been buzzing away downstairs, giving some of the boys a couple of headaches every now and then, but well worth it for the company. They've been doing some pretty crazy returns, the Casper miners. I think the one that we recently just got in a recent batch, we just sent a whole heap out to clients as well, and we've got one running downstairs, turned off right now for the podcast, obviously. But that one's doing $400 a day. We'll see how long we can maintain that. We do think that it should last longer than anticipated, because these miners, we actually can't get more from them from the manufacturer at the moment. They're fully sold out right now. So that gives us some hope that at least what's on the network right now is probably what will remain. You never really know if they have their own miners on and they're shipped out or what's going on there, but it seems to be fairly stable. If we can maintain that $400 a day for a bit longer, that'd be absolutely awesome for us and our clients. So
laughing.
Yeah, absolutely. So anyway, if anyone's interested in those altcoin miners or Bitcoin miners, if you haven't mined before, we definitely recommend the Bitcoin side. The altcoin miners are a little bit more of a higher risk option, but definitely get in touch. And is there anything else that we want to tap on for the end of the podcast this week, Mitch?
I don't think so. I want to get back to the charts.
Get back to the charts. That's what we're hanging out to do. Well, thanks for joining in, guys. And of course, if you want to read the paper version of this, head to the Imperial Wealth website and go to the Crypto Chronicle, and you can sign up there and access all of the information that we've gone through in written format. Cheers, guys.
Thanks.